Rent limits are a big deal. Nobody, in my mind, intentionally overcharges rent, especially if they know they're participating in a rent-restricted program. The difficulty lies in understanding what number you're supposed to use. So HUD publishes limits, and we're going to, again, compare and contrast the low-income housing tax credits and the private activity bonds. If you have a bond and tax credit deal, as we've been discussing, there are three factors that I want to highlight that could mean that you have different limits. So first of all, we're showing unit size, so SRO, single resident occupancy, 1 bedroom, 2 bedroom, 3 bedroom. The rent limits are based on an imputed number of tenants so that it can be consistent for the unit size and not have to be traced directly to actual households living in there. But we're basing our rent limits on the income limit of the number of bedrooms times 1.5. That's the household size upon which we're basing our rent limit. So at the SRO, it's just a flat 1. It really comes into play at a 1 bedroom, 2 bedroom, 3 bedroom. So we're assuming that our rent limits are based on the income limits of a 1.5 person household in the area for a 1 bedroom, for a 3 person household in a 2 bedroom, and for a 4.5 person household in a 3 bedroom. So in Random County, USA, the 2016 limits for 40 at 60 minimum set aside project was PIS, that's placed in service after 3/28/2016, because we just got new limits just a couple of weeks ago. And then we have a bond determination letter during the fiscal year 2014 for this idea of a LIHTC rent floor. Now, how many layers have I already talked about already? This is quite a few. Like, why is all of this important? So this sets out the provisions here, the minimum set aside, the new limits. The bond determination letter is an actual act of mercy on the part of the program, saying, hey, if you were underwriting the rents that you think you could charge to make this financially feasible all the way back in 2014, and if by the time you place it in service in 2016, all of a sudden those rent and income limits have dropped to where hypothetically now I can't charge enough rent to make it cover all of my debt and service the debt and pay my other bills, then you'd think, hold on, everything looked good 2 years ago. So the program says that you can look back to your bond determination letter in 2014 for your LIHTC rent floor. So your rent limits as published by HUD corresponding to all of these factors, let's assume it's $844 per month, $904 per month, $1,084, and $1,253. Private activity bonds are a little more Wild Westy, where there's no defined standard in 142. It will vary by your area. Often that means that, okay, well, we'll just adhere as closely as possible to low-income housing tax credits, and then you're lined up very nicely. But the allocating authority or the area itself under which your bonds are issued don't necessarily have to, in their regulatory agreement, don't necessarily have to do that. And so one variation or difference could be in that imputed household size upon which you are basing the income limit upon which you're basing your rent limit. Your income basis, which we'll talk about, and then this idea of a utility allowance. So these are the three layers where it starts to get a little quote-unquote fun. It is common, or not uncommon, I should say, to have your bedrooms or the imputed number of tenants be number of bedrooms plus 1. And so that actually happens to work out the same for a single resident occupancy. It's different for 1 bedroom. It'll be the same for 2 bedroom, and it'll be different for your 3 bedrooms. And so we can take the exact same income limits that are published by HUD, but for a 3 bedroom, we have to do a 4-person income limit. And for the 3 bedroom on the low income side, we do 4.5, which is essentially the halfway mark between the published 5-person and 4-person. So let's say the rent limits here, just with that factor alone, would be $829 per month for bonds, $948 per month, $1,066, and $1,183. So here we're showing we've got 1.5 is the lower for 1 bedroom, but for the 3 bedrooms it's 4. That almost single-handedly is the contributor as to why the bonds would be lower for the 3 bedroom and the tax credit number would be lower for the 1 bedroom. And then these are essentially a wash here. And so we think, well, why is it that one is 1,066 and one's 1,084. The reason here is the bond determination letter. Remember when I said back in 2014, the tax credit program lets you set a rent floor in case it has dropped since 2014. So what we're showing here is for 2 bedrooms and SROs, if they're both based on 1 and 3, that the bonds are showing 1,066 and 829, that 844 and 1,084 means that tax credit numbers must have been higher in back in 2014, and you're getting to benefit from those had you not been a bond property. And so all of that applies here, but after these 2 factors are layered in, we've got bonds being lower than tax credits. Now the third layer here with the utility allowances is LIHTC rent limits are reduced by a published utility allowance if applicable. So that's if the tenants are paying their own utilities, then whatever your applicable utility allowance is, and there's, believe it or not, we do a whole webinar on that too, which one you use. But let's say it's your local public housing authority. They publish a utility allowance and we say, all right, everybody's paying these utilities and we have to reduce the amount that we can charge them by whatever the public housing authority is publishing. So let's assume that the bonds in this area, their regulatory agreement doesn't account for utility allowances. So in that case, with your LIHTC limits, net of reduction of utility allowance, and bonds, it would just be gross. So if we have a utility allowance of $30, $35, $50, and $65, then we subtract 30 from 844, 35 from 904, 50 from 10,000 or 1,084, 65 from 1,253, and now all of a sudden it's even lower. So these are all the factors, and essentially, long story short, is when you're using, for example, the free Novogradac rent and income limit calculator, plug there, again, it's free, that this is what that is taking into consideration, but there is a possibility that you might not be entering in everything correctly. That's why you want to double check. You want to, you can call up our professionals as well to make sure that you're doing that right. Communicate with other parties on the ownership team, because this is absolutely critical that you get this right.